Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. All right, so we're going to get into the charts. As always, all charts and data, no BS here at Verified Investing. Number one, markets are in turmoil. We are seeing a decent drop, 1% on the S&P and 1.5% on the NASDAQ 100. Multiple reasons for this. Number one, Michael Burry, he released his latest holdings. Get this, folks. 80% of his portfolio is in NVIDIA puts and Palantir puts. Speaking of Palantir, we're seeing Palantir drop today significantly after reporting a beat on the top and bottom line yesterday. This is important because it shows you valuation is starting to matter. So they beat, they even raised guidance, but it doesn't really matter, right? Because if you go up indefinitely, at some point, even a beat and a raise is still already factored in. And you're seeing a sell the news event here. We're going to look at that. Let's jump into the markets. We have some other big events to look at, but let's look at the S&P 500 here. S&P futures are down sharply again. Notice this is where we closed yesterday, right up here. So you can see, again, a significant drop of about $70 to $75 on the S&P 500 to go into the open. Now, remember yesterday, in yesterday's trading game plan, I said, guys, watch the early action, because we've been seeing an open higher a lot of days and institutions dumping into investors, right? Into retail, especially the first of the month. There's a lot of new volume early in the day because new money is coming into 401ks. Look at this. We opened up here yesterday on the S&P. We sold off for the first basically 2 hours of the day, and then we floated. Once the institutions turned off that spigot, the markets then went back to their slow buy the dip, grind higher mentality. Look at Friday. Friday again, we opened higher here. We kind of dipped and we fell all the way down. The institutions stopped selling here and we floated back into the end of the day. And again, these are important because you have to recognize that, again, the institutions don't unload all day long unless they're in panic. They have to be strategic about this, because ultimately, if they just keep unloading, it's going to eventually crash the markets, right? Eventually, retail investors are just like, hey, listen, this market doesn't go up anymore in the afternoons, or it doesn't, the buy the dip's not working. So you have to understand their game plan. They have so many shares, so many hundreds of billions of dollars to unload, that the only way they can do it is when there's the highest volume period of the day in the first quarter or half of the day. All right, let's go to the S&P 500 daily, or actually we'll flip it right to the weekly. This is the one I've been showing you guys. And again, it is a thing of beauty. In my opinion, we're on the verge of a correction. We might have even started it. Here's your weekly chart of the S&P, your COVID low, your bear market low, subsequent pivot lows right here and here, and then your liberation sell-off low. And sure enough, you map that to the bull market high. And what did we get on the weekly chart last week? We pierced, we closed below. Yesterday, we opened above and we closed below. This, my friends, could be very damning for the markets in terms of telling us a bigger sell-off is coming. Now, couple that with what I showed you yesterday. One of the most remarkable finds I have made in the charts in recent history, as I studied all weekend long. Again, I enjoy doing this, mind you. It's not that I'm just working. I actually enjoy what I do. But if we go to the SMH, notice again, in 2021, the furthest away from the weekly 200 moving average, which is this line here, we got was 102%. In 2024, we got 102% up from the weekly 200 moving average. Again, notice how each time we got that distance, we corrected 45%, 40%. All right. Then we say, oh, well, how far away are we from the 200 moving average per last week's high? We bring it up here and lo and behold, 102%. So again, if we just use our logic, what does this tell us? It tells us generally, it doesn't tell us 100% of the time, but it tells us in general, when the SMH, the semiconductors, get 102% away from their weekly 200 moving average, we should have some sort of correction in the semis. And that's the AI trade. Remember, the semis are the AI trade. So keep that in mind. Now, we have to go even into something crazier than that. So one of the things we've been talking about is Jamie Dimon and his warning about defaults in the banking sector, about loans going bad, a spike. Where there's one cockroach, he said, there's many, many others. Take a look at this, guys. This is the Federal Reserve Bank of New York's repo operations. Okay, if we scroll down, look at this recently. These are banks borrowing money for emergency purposes in the last couple weeks here. Look at the spike up. Friday, we saw a total of 49 billion between treasuries and mortgage-backed securities. And yesterday, we saw another 21 billion being borrowed. Now, put that in perspective. If we flip to the yearly chart on this, look at the yearly. All right. Does this look a little interesting? Like, look at look at all the usage right here. And if you go back in the entire last year, there was one point here where basically 11 billion was borrowed, and that was it. That was in July of 2025. Aside from that, nothing, literally nothing in the last year was utilized by banks in terms of emergency lending. And just to understand, the repo facility was made permanent in 2021 following the big banking crisis we had back then. And essentially, it allows banks to put up treasuries as essentially, to kind of warrant the lending from the Federal Reserve of this money. All right. So again, the Fed is willing to lend these banks essentially almost unlimited funds as long as they have that collateral of these treasuries. And that is showing us again that in the banking sector, there is more trouble brewing. And again, just to go back to this chart, look at that, folks. Look at this, what's going on recently. Now, again, does this mean we're on the verge of a financial crisis? No, it doesn't mean we're on the verge of a financial crisis, but it certainly means there's stress in the system. When you compile that with valuations of stocks, right, basically at potential levels of other bubbles, when you combine that with what we've talked about with the charts, when you combine that with a labor market that is weakening, and we talked about yesterday how Chipotle, how McDonald's, how all these kind of lower, basically eateries, fast casual, that was kind of just like, oh, we could run in there for 10 bucks and get whatever. Now it's 20 bucks. Like, you're lucky to get out of Chipotle with chips, guac, and a burrito for less than 20 bucks. And that's putting pressure on a massive amount of the population. All right. So again, the cracks continue to emerge here, in my opinion. And again, we have things like the SMH here, very clearly looking at the SMH. We have that extension move. Now, I want to show you a couple other things. Number one, quickly, going to the QQQ chart, we know we were up into this as of last week. We're now starting to fall. You can see where we're trading pre-market down here. But a lot of this is on the back of this stock right here. We talked about this right when I started the game plan this morning. Palantir is getting hammered. Yesterday, initially on their beat and raise, it popped to $222. It's trading down over $30 from that high after hours. Almost basically 10% drop today in the stock. Now, again, if you go to this chart, I mean, look at this chart. Incredible. If you go back here, we're talking about May of 2024. This was a $20 stock. So again, just think about the run it's had. Incredible move to the upside. And also, one thing I talked about yesterday is that, when you're talking about Palantir, you're not talking about earnings per share and the valuation. I mean, what's the earnings per share? That's what we all ask, right? With Palantir, it's what's the revenue per share. You got to go to revenue. And revenue is like literally almost 100 times revenue. That, again, historically has not been good for companies. In 2021, there were stocks like SE that had that valuation. Let's take a look at that. In fact, let's look at SE back in 2021. This was SE, folks. And again, I'm not equating SE as a company to Palantir. It's basically an Amazon of South Korea and that area, the Asian markets or something. But the point, and it also does video games and stuff like that from what I know. But the point is, this essentially was in that same boat, and look at the drop that it had. Now it's come back as it's grown into its valuation a little bit, but this is the type of thing that I'm worried about for something like Palantir. So keep your eyes open, guys. Again, you have Michael Burry loading the boat on puts, basically making the same sort of bets that he did in 08, 09. You have the markets dropping today on the back of Palantir. You have the Fed repo facility being tapped. And then you have valuations and the technicals. The technicals, again, that I showed you on the S&P and on the SMH, unbelievably crystal clear that at least probability, not certainty, but probability favors something big here in the near term. All right, let's go to some other charts. The dollar today, the dollar is bumping up against resistance here. I have my zone of resistance going back here to 2023. We are in the lower zone. We talked about how I think I had calculated out an inverse head and shoulders target going back from here, right? We talked about this a few weeks ago, right? I haven't really talked about it much since, but believe it or not, it never negated and was still on pace for this target, and we're essentially hitting it now. Speaking of inverse head and shoulders or head and shoulders, Meta, don't forget about Meta, folks. It continues to spiral lower after that head and shoulders finally hit target. Price has not stopped going down. The 10-year yield today is flat to negative. We're still around 4.1%. That is still elevated as the risks of no cuts in December continues to be a plausible scenario. And if you look at the Fed watch tool, they are still pricing in a cut in December, but then no cut after that until basically Powell's out of office. And again, then we all expect like 50 basis points at every meeting probably. But again, a lot will be determined by where inflation is. Okay, inflation, again, while the metrics have been a little bit more muted, if you look at specifics that are affecting you and I, energy, food, still 6% inflation, 7% inflation on the metrics that most of us spend a majority of our money on. All right, let's get into some earnings from today. We talked about Palantir. Again, Palantir down about 10%. I'll go back to Palantir in a minute. We'll talk about levels, but Shopify is down slightly on earnings. Not a big enough move to get me out of bed to trade this. However, Uber on earnings is falling pretty sharply. Yesterday, closing around $100, trading at 92. If we look at this chart, it was kind of trading in the upper ends. My first level to trade today will basically be this $85 level. There's this gap fill and this pivot low right here. That would be my first nibble as a trade today on Uber. Now, going back to Palantir real quick. Again, the stock was basically trading. It was, in fact, at all-time highs yesterday. First level of support, there's a gap fill here at 180.40. That'll be my first level that I'll tune into. It's still about $10 lower. But when you have a stock that's this vertical, you can't really jump too early. You jump off sides too early, you're going to get burned. Notice this uptrend sloping trend line as well. It's virtually at the same spot as the gap fill. And so again, the combination right here would get me into a day trade, not a swing trade, mind you, not even close to a swing trade. I just showed you that SE chart. You better believe I'm going to need it to correct a lot more before I go long Palantir, considering where it's trading. Speaking of swing trades, we can always look and see what the level would be. I mean, where would I potentially need this to fall? I would say I would consider it at this former pivot right here at around 124 to 125. You get down there, I might play it as a swing trade. Remember, a swing trade is only a multi-day, multi-week hold. It's not a long-term play. I still wouldn't even touch this as a long-term play. I would consider it at like 60 bucks. 60 bucks on Palantir. Okay, I'll throw some money into it as a long-term hold. Aside from that, I'm swing trading the pivot supports and pivot resistance levels back and forth. Pfizer reported earnings this morning. The stock is trading basically down slightly. I continue to like this as a defensive name. By the way, this is one of the positions that Michael Burry does have. They pay out a 43-cent dividend per Friday. Any shareholder of record as of Friday will get the 43-cent dividend in December. And again, I just look at the bigger time frame. This company, by the way, beat on earnings, beat on revenue, and even raised guidance slightly. But again, with the markets down, it's really basically flat to slightly negative. I'm curious to see what it does. I'm ultimately looking for a move up to 27.50 and then a breakout above that down the line. Until then, I'm very happy to basically make the 7% dividend yield as it hovers in these lower ranges. Now, let's talk about this chart. This is Netflix, okay? Now, Netflix. So Netflix was trading as high as 1,300 and change. And what we saw recently is them stop reporting subscriber numbers. That's always a kind of a yellow warning flag to me, like, oh, they don't want to report subscriber numbers anymore. Okay. And we saw them even fall recently on earnings when their earnings were not really as robust as we saw. Then we heard about them potentially buying, I think it was either Paramount or Warner Brothers. They were going to buy some assets. Essentially, it's starting to look like Netflix is growth engine is stalling out. To reiterate that, the company announced just last Friday, or it was Thursday after the bell, whatever it was, that they were going to split the stock 10 for 1, right? So they were going to do a stock split. And anytime, so initially the stock rallied up on a stock split. So, oh, a stock split, this is good news. No, 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 no. Not when they're using it to generate interest in the stock because they literally have nothing else positive to do. All right. When a stock uses this, right, think about this. If we go to the charts, they could have announced the stock split anytime over here when things were good, right? They waited until bad news, the stock drops on earnings. Then here's your jump on Friday on the back of that announcement, because in general, again, people think that, oh, stock split's a good thing. Not in this case. Stock split, again, you could see the next day, yesterday, we came hard down, basically erasing those gains. It just tells you that basically management, the CEO, they have nothing positive to say, so they're trying to artificially jump their stock price and, again, get it up. So they're like, oh, well, if we cut the price by a tenth, right? If a share is 1/10 the price, it's about $110 a share. Maybe more investors will be able to buy it. Yeah, well, that doesn't mean your company's doing great if that's what you're relying on to get people to buy your stock. All right, I digress, guys. Let's keep going. Gold today. Gold is coming down. I still expect gold to break this first support level, which it bounced at. That was a perfect call. I nailed the top here. Good support here. We got a little bounce. I still think it's going down here and potentially these lower levels. Gold has not broken yet. Let's watch here in the coming days. I do anticipate gold to break lower. All right, let's look at silver real quick. Silver, same thing. I'm anticipating further downside on silver. Again, you're stuck within this bigger parallel here, marking the '08 low and the COVID 2020 low with the bull market high for silver in 2011. That's what gave me this high pivot here. And ultimately, again, today we are coming down. Next move down should yield a price target. There'll be a little bit of support around 44. But really, I'm looking at that 42 to 43 is where I start nibbling a little bit most likely on silver. Oil, again, has been forming a little bit of an inverse head and shoulders. We talked about it yesterday. Again, there's your shoulder, there's your head, there's your shoulder. But remember, until it breaks the neckline, it's only a formation. It doesn't trigger. Triggers occur on a daily close, in this case, above the neckline of the inverse head and shoulders. That's where the odds increase substantially. Right now, it's just a fun pattern to watch. And again, that's great because you want to know when it triggers. But I caution people against jumping the gun on inverse head and shoulders and head and shoulders. They can form, but until they actually trigger by breaking the neckline, doesn't mean much whatsoever. All right, couple other charts here. Let's look at nat gas. Then we'll go into Bitcoin. We'll even touch on ETH today, as it is, again, potentially confirming a breakdown. Oil nat gas continue to rally to the upside here. Beautiful, beautiful move on the breakout. And again, if we zoom out to the weekly chart, you can see that longer term trend line. This is my upside target on natural gas. All right. So again, looking for nat gas to get as high as about 490 to about 530. This again, notice where I'm finding these levels from, right? I always love showing you guys. So these lows right in here will act as resistance. And then this high right here will act as resistance. And that's how I get this zone for where nat gas should run into major resistance. But look at that beautiful breakout, how you had this high to this high and even right here. And you even kind of danced around it right here before finally breaking out. Very, very cool. Bitcoin going down. We've talked about how my downside target is around the 93 to 95,000 level. It does look like it's on its way there, folks. It hasn't broken 100,000. I'm sure there'll be some buyers at 100,000 because of the even number. Maybe we get a small bounce there. There's also this low pivot right here around 99 to 98,000, which could act as a little bit of support. But I can't deny this longer term trend line. Look at this trend line connecting all of these lows right through here. This is going to be, in my opinion, the make or break level. This should be where we actually see a good area of attempted support and maybe a low. We'll have to watch, but it could be a low on Bitcoin. It probably will be where I do at least a swing trade long with my members of Smart Money Crypto, where we swing trade crypto both long and short. But again, it is working out beautifully. Remember when we got above right here, I said, guys, unless it confirms back above this line, don't get fooled. And again, look, anyone who got fooled, oops, rug pull right back to the downside. Learn your confirmation signal. It is a game changer. Next up, let's take a look at ETH. ETH closed below. I'm going to get rid of this line for the time being here so we keep it clean. Here you have your low pivots. Again, this is how I found this trend line. It's a beauty right here. And again, right through that low and even there. And we closed below it. Okay, so that's not a breakdown. That's a potential breakdown. If we confirm today, which if we close here, we would, then it is an official breakdown. Then you could still bounce back to the scene of the crime, but essentially you'd be going lower. My downside target is right in this range here. Basically, this 2,750 zone. You can see all these high pivots right along here. That would be my downside buyable level on ETH based on technical analysis. All right, guys. So I have just a couple minutes to do a couple questions. Appreciate as always when you guys send me questions in. So let me go over here reading. Let's see. Could we look at, really appreciate the daily game plans and insights. First question says, could you take a look at Uber? We kind of already did on that front. So again, we don't need to go into that too much. I can flip it back to Uber real quick here. Bear with me. Let me show my screen here. Uber on the front here. Let's see, Uber. So yeah, so Uber's again down on earnings. I think I gave you guys my level earlier around $85, right in this range right here. That would be my day trading level. Where would be my swing trading level? That's a good question. What I would do right here is very simply look at this trend line. Look at the beauty of that trend line. I would consider a swing trade around $70. Do you guys see that level? So low pivot, goes right to this third pivot right there. Exactly. So right here would be that buyable level on Uber. All right. Next question says, let's see here. Awesome analysis. Did Bitcoin form a head and shoulders yesterday with a target of 90 to 95,000? So a target of 90, that's a really broad target for head and shoulders. A head and shoulders or inverse should give you literally to the dollar a target, right? We talked about that on Meta and how to calculate that in previous videos. But let's go back to Bitcoin real quick here and just take a quick look. I think I know what you're looking at. You're looking at this shorter term thing right here, where you had this, right? And it is a formation, and it did trigger yesterday right there, right? So there's your, well, actually, it technically would trigger today. But let me just do the calculation on that. Let's find out if that actually does bring us to the level. So what we do is we take the high of the head to the neckline, and then we do a measurement on the break. It would take us to about 96.6. So very close to 95, which is that, zone of the target. Yep. So again, listen, the one thing I will say, and this is what I cover in my Winning Trader series, which by the way, will be on 50% off. It'll be 50% off during the Thanksgiving week, that week right there of Black Friday. So be ready for that, guys. That's going to be really, really cool. We're going to be doing sales on every course we have. Education by far is the most important thing. But one of the things that I teach is that head and shoulders work best at the highs of charts, like on Meta, right? If we go to Meta here and we take a look at this head and shoulders was at all-time highs. Those are the highest probability formations. Inverse of that would be at 52-week lows or all-time lows. If you got an inverse head and shoulders, that would be very high probability. On Bitcoin, it's still a good formation. The probability is just lowered a little bit because it's formed off of the recent highs. So here was your recent highs, and here's your new head high. So it still is the formation. That is fair, but the probabilities of the calculation being as accurate are a little bit lower. So things like that, little nuances. Remember, we're in a game. If you're truly a technician, you're in a game of probabilities, and every little movement, like up or down a couple percentage points, actually matters, right? Over the course of 1,000 trades, it actually can be a big deal. And so we always want to remember that. All right, I got to get going to my trading room. You guys are amazing. Keep the comments coming. Keep the likes. Please share with friends and family if you think they would be into this type of analysis versus being stuck on social media and all the hype and influencers that just pump out nonstop drivel. I always appreciate that. I really hope that my legacy is helping people learn how to read charts and honing in on that ability versus focusing on emotion. You guys have a great one. Thanks so much. Take care.